Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the Forex market. So you can see that currently we have the pullback across the board. Somewhere it's a bit stronger, like on Great British Pound. Somewhere it's a bit slower, as on Euro currency. So market is getting some relief on recent really tough few days. That really a lot of negative news have been reported, and actually they are still stands here, so they are not disappear. So although some traders make the suggestion that maybe that's all, so maybe this is the bottom and market is ready to reverse, but using just the common sense, it tells me that hardly this stands so. Just because on any reversal in the market, the fundamental background has to change, and here we do not have it. Not have any changes. So credit default spreads on the credits used is still high, despite that they have announced some supportive measure for the $5 billion, and actually the credit default spread for the credits used currently above the one that was in 2008 on Lehman Brothers. Just a comparison, credits used has four times greater assets than the Lehman Brothers. The Deutsche Bank is also stands next after the credits use. So in general, a few European banks, top European banks, now stands in a dangerous place. This first moment. Second moment, currently already the United Nations called for central banks to stop rate rising. So it seems that really painful for all economies. But I ask you about the Fed policy. So what they just currently agree to release the interest rate and let everybody start selling dollar assets. For United States, this is a vital moment for surviving of the national economy. They have to keep a lot of money and attract more and more in the debt market. If they stop to do this, the debt market in the United States will collapse, because there will be no demand for the debt with this highly strong negative rate, and well, they just can't let it to happen. That's why I think that this is just ordinary trap that is building on retracement. This very often happens on the stock market. I already shown you that usually market makers trigger 3, 4, 5% rally, because rally has the specific that is drastically changes the sentiment, short-term sentiment of the investors. They see that market is rising for the few days, maybe for the maybe for the week, and they forget about the collapse that has happened. They start buying again, it's making the trap, and then market makers step in and just trigger another leg down. Something of that sort I suppose is going on currently on other markets, currently on the stock market, on the Forex market as well. The only situation where we could expect a reverse if indeed Fed stop interest rate rising, or maybe announced the quantitative easing again. In this case, this could happen, but for them it will be the suicide. I don't know, maybe some rumors have appeared in the market about this, that something is going to change, but I do not know about this. So that's why our conclusion is, for me at least, I think suppose that it's too early to treat this current pullback as something big, so suggesting that tendency is changing. I treat this current pullback just as retracement, some minor relief on the markets. So that's why I think that we could keep going without a trading plan, that we suggest that market technically is approaching to nice resistance area that theoretically it looks interesting for taking the short position. Of course, as we said in the weekly report, the market is oversold on the weekly chart, and we suggest that in the medium term perspective, it might be stronger upper retracement in the way of some kind, maybe ABCD pattern. It's a bit deeper pullback. But on the daily chart right now, as market coming to resistance, we could get some bounce out from this area. I don't want to say that this definitely will be the downside continuation and crush, but here is moderate pullback on the daily chart easily could happen. So that's actually what we could keep an eye on. So if you would like to take the long position in your currency with this upward tendency, you probably should wait for some pullback, because it's not very comfortable to take position right at daily overbought and inside of the confidence resistance. So here we see also the natural resistance that market is coming to, and on the hourly chart I suppose that we could keep an eye on this butterfly. Maybe this patch in particular will be the background for starting the pullback, because in this action right there you could see that overall price performance is not the same way as it stands right there. Here is definitely strong and more thrusty action. Here is a bit more choppy and slower, and it's coming to butterfly destination point. So I suspect that it might be the pattern that theoretically it might be used for taking the short position with the starting some pullback here and on the daily chart. So that's I think that we could keep an eye on in the nearest few sessions.